cut the feed, kill the noise. I don't care what chart you are looking at. Eyes front right now. This is no longer a drill. This isn't some mild market correction. You hear that ticking sound? That is the fuse burning down on a C4 charge buried under the foundation of the US financial system and by extension, your wallet. Ladies and gentlemen, throw out the textbooks. We are not here to talk about risk. We are here to talk about extinction. Not the daily ups and downs clowns discuss on CNBC. I am talking about a total wipeout. The kind of systemic collapse that turns you from high net worth to the proletariat in 2 quarters. Look at the Bloomberg terminal. Look at that red number. The S&P 500 Schiller PE ratio. It is the only metric that doesn't lie. It has violently breached the 40 handle. A retail investor looks at this and stares blankly. Oh, stocks are a bit expensive. Wake up! You are taking a selfie inside a volcano. The historical baseline for the S&P is 17. We are not just trading at a premium. We are streaking naked through a statistical no man's land. This level of extreme anomaly has happened only twice in the history of capitalism. This isn't just data. This is a death warrant. This is a locked theater where the air smells of gasoline and you are still lighting a cigarette. It is a mean reversion event that is destined to happen, and it will fall with the precision of a guillotine. If your current portfolio is still 100% long, the S&P 500, stop lying to yourself. That is not investing. That is strapping a bomb to your chest and driving 200 miles per hour on black ice. You aren't dead yet, simply because you got lucky and haven't hit the guardrail. But the laws of gravity, financial gravity, are watching you, waiting to claim their due. Wall Street has a toxic lie that has destroyed more lives than a plague. This time is different. That is the hymn sung by the sacrificial lambs. Let's go to the morgue and see what happened to the people who believed that before. 1929, the eve of the Great Depression. Do you think investors back then were stupid? Wrong. They thought they were gods. They had radio, they had assembly lines, they believed in the permanent plateau. Productivity was flying, euphoria was high. But before the gates of hell opened, what was the Schiller PE? It was 30. Just 30? That level alone triggered the Great Purge, evaporating 89% of wealth and sending a generation to the breadlines. Now look at the year 2000, the dot-com bubble. I saw that slaughter with my own eyes. The script was identical to today. The internet is a new species. Valuation is a relic. Traffic is the new logic. As long as a company had .com in its name, its market cap went vertical. That was the peak of irrational exuberance. Yes, the internet changed the world. But the believers? Slaughtered. The Nasdaq took an 80% haircut. 80% of flesh and bone gone. Amazon collapsed 90%. The giants took 15 years to crawl out of that hole. Before that avalanche, what was the peak PE? It topped out around 44. Where are we now? We are sitting right on a keg of dynamite at 40. We are walking a tightrope over a cliff higher than the Great Depression, and the data under our feet matches the dot-com bust exactly. The market is a pendulum. Right now, it is stuck at the peak of extreme greed. But when gravity lets go, it won't stop in the middle. It will carry that momentum and smash through the floor directly into extreme fear. Listen, a crash isn't just about expensive. It's because the market structure is rotten to the core. Look at the tape. Does this look like a healthy heartbeat? No. It looks like ventricular fibrillation on steroids. Real estate, stocks, crypto, watches, everything is going up in unison. This is the everything bubble. A monster fed by cheap money. You look at the unrealized gains in your account and feel like a genius. But you are trapped in a liquidity illusion. Today's market is a machine controlled by passive ETFs and quantitative algorithms. When money flows in, prices float like helium balloons. But liquidity is a coward. When trouble hits, it disappears faster than anyone. Once the wind changes, algorithms pull their bids instantly. The floor drops out. Suddenly, that money on your screen becomes waste paper. Because when you want to sell, there is no one to buy. In a PE40 panic, the buyers are extinct. You are being engineered as exit liquidity for the institutions. It's a dirty term, but it's the truth. When you buy Nvidia at the top because of FOMO, who is selling to you? It's insiders. It's hedge funds. It is the smart money. They are looking at this data, slipping a live grenade into your pocket, and slipping out the back door. You are locked in. You don't dare to cut your losses because you're hallucinating about that last 5% of scraps. But as professional traders, we fear only one word: drawdown. The math is brutal. If you lose 50%, you need to make 100% just to break even. At this altitude, survival is 10,000 times more important than profit. So, what is the play? Liquidate, buy guns, and hide in a bunker? No, that's cowardice. You need armor that can survive hard mode. I call it the Iron Shield. Flush the get-rich-quick fantasies out of your brain. Replace them with math and survival. I have selected a group of ETFs to bulletproof your assets. These have passed the acid test. We looked at how they performed in the meat grinder of 2022 a year when cash was trash and both stocks and bonds died. I want to show you how, when other assets were burning, these stood hard as granite. First line of defense, the human lifeline. If the world collapses tomorrow, the grid fails, the banks close. As long as humans are breathing, what do they need? This is inelastic demand. Consumer staples. Tickers, VDC, and XLP? Don't talk to me about iPhones or Teslas. Those are cyclical toys. When the Great Depression comes, those are the first things you sell. I'm talking about Procter & Gamble, Costco, Walmart. Use your brain. No matter how much money you lose in the stock market, do you still need to brush your teeth? Do you need to wash your clothes? Do you need to wipe your rear end? Yes, that money is physically impossible to cut. The worse the economy gets, the more people skip the Michelin stars and fight for cheap canned beans at Costco. What do you call that? God-tier pricing power. Inflation at 10%, who cares? They raise prices 10%. You will curse, but you will pay. The scorecard, 2022 stress test. The S&P 500 fell 19%, the Nasdaq fell 33%, absolute carnage. VDC didn't budge, zero volatility. That is a safe haven. Second line of defense. This sector is boring as hell. No stories, no feelings, utilities. Ticker FUDI. I know power and water sounds like a grandpa stock, but on the edge of a PE 40 cliff, boring is your life raft. Next era, Duke Energy, Southern Company, the monopolies that control the arteries of the nation. Ask yourself, if the market melts down tomorrow, will you call the power company and say, hey, cut my line, I need to stop out? Will you freeze in the winter? No! You will sell your car, your watch, even your kidney, but you will pay the electric bill. This is called guaranteed revenue. And there is a macro bonus. This sector is the only real gold in the AI bubble. What does AI need to run? Data centers. What do data centers eat? Electricity. Oceans of electricity. The US grid is tapped out. Demand is going vertical. Utilities are the pick and shovel play of the AI revolution, but without the suicide mission valuations of tech stocks. The acid test 2022. Rising rates should have killed utilities, according to the experts. The experts are idiots. When the S&P crashed 19%, FUDI went up 1.6%. In a sea of blood, it was the only green island. It is a miracle. It is fighting the laws of physics. Finally, complete the iron triangle. Your biological body, healthcare. Ticker XLV. The logic is simple. Humans get old and they break. The baby boomers are aging. The silver tsunami is here. Medicine, surgery, care, these are non-negotiable. XLV holds the giants. United Health, Johnson & Johnson, Lilly. Curing cancer, selling weight loss drugs. The 2022 test. The market crashes 19%. XLV, down a tiny 2%. That's a mosquito bite, not a scratch. If you still want some growth, but don't want to die in a tech bubble, this is your Noah's Ark. That's the sectors. Now for the special forces. Factor strategies. First, SCHD, Schwab US Dividend Equity ETF. Carve the sticker into your forehead. SCHD. Listen, the words high dividend are a trap. The market is full of trash dividend stocks. Those are yield traps buying dying companies just for the payout. SCHD is elite special ops. It only cares about the quality factor. The hurdle, pay dividends for 10 consecutive years. But the killer feature? It rigorously screens for free cash flow. High debt, executed on site. What are you left with? The hardest money printers in America. Home Depot, Chevron, Pepsi. Why is this key? In a bubble, people buy PowerPoint slides and dreams. When the bubble bursts, dreams suffocate. Cash is king. When liquidity dries up, only companies that can actually earn cash survive. SCHD is a cash fortress. Second, USMV Minimum Volatility ETF. This is for the people with weak hearts who are afraid of dying. USMV. This is a masterpiece from the math geeks. Algorithms scan the entire market to calculate a portfolio with the lowest historical volatility. It hates drama. It specifically picks the steadiest stocks to push beta risk right into the floor. This is your entire arsenal. VDC, XLP, FUTI, XLV, SHEDE, USMV. This is your doomsday survival kit. But I know what you are thinking. The greedy little devil is still whispering in your ear. But what if it goes up? What if I miss out? What if AI pushes the S&P to 6,000? Shut up. If you think like that, you are the standard patsy. Exit liquidity. Are you really planning to bet your entire future just to scrape another 5% off the top of a parabolic chart? Do you know what happens the day the bubble bursts? It is not a slow leak, it is a rug pull. Algorithms stop out, liquidity goes to zero, bids are pulled. You watch prices free fall, you freeze, and finally, you sell at the bottom. I have seen this movie 10,000 times. I am not telling you to sell everything and live in a cave. I am teaching you sector rotation. This is how the pros play. Sell the tech stocks that have tripled. Move that house money into SCHD, move it into VDC, lock in the win. Imagine this, 2 years from now. Look at the ruins. There is blood in the streets. CNBC is discussing the Great Depression 2. Your friends are bankrupt, crying into their drinks. And you? Your account might be down 5%. Your SCHD dividends are hitting your account, and you're buying bloodstained shares like a king while they're cheap. You are calm. You are safe. You will look back at this moment and you will thank yourself for having the guts to be boring. This is a battle royale. In this market, there are only two types of people: hunters and prey. The exit doors are closing. Run.